there, Mary Jane Elliott here, realtor with the Vaughn Group over at Intero Real Estate. Did you know homeownership is a great hedge against the impact of rising inflation? If you're following along in the news today, you've heard about rising inflation. Today, inflation is at a 40-year high. According to the National Association of Home Builders, consumer prices accelerated again in May and June as shelter, energy, and food prices continue to surge at the fastest pace in decades. This marked the third straight month for inflation above 8% and was the largest year-over-year gain since December 1981. With inflation rising, you're likely feeling it impact your day-to-day life as prices go up for gas, groceries, and more. These climbing consumer costs can put a pinch in your wallet and make you reevaluate any big purchases you have planned to ensure they're still worthwhile. If you've been thinking about purchasing a home this year, you're probably wondering if you should continue down that path or if it makes sense to wait. While the answer depends on your situation, here's how homeownership can help you combat the rising costs that come with inflation. Number 1, homeownership helps you stabilize one of your biggest monthly expenses. During a period of high inflation, prices rise across the board. That's true for things like food, entertainment, and other goods and services, even housing. Both rental prices and home prices are on the rise. So, as a buyer, how can you protect yourself from increasing costs? The answer lies in homeownership. Buying a home allows you to stabilize what's typically your biggest monthly expense, your housing costs. When you have a fixed rate mortgage on your home, you lock in your monthly payment for the duration of your loan, which is typically 15 to 30 years. A fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your housing monthly payments will remain the same. And that's certainly not the case if you're renting. So even if other prices increase, your housing payment will be a reliable amount that can help keep your budget in check. If you rent, you don't have that same benefit and you won't be protected from rising housing costs. Number 2, investing in an asset that historically outperforms inflation. While it's true, home prices and higher mortgage rates mean that buying a house today costs even more than even a few months ago. But you still have the opportunity to set yourself up for a long-term win. That's because in inflationary times, you want to invest in an asset that outperforms inflation and typically holds or grows in value. The average home price appreciation outperformed the average inflation rate in most decades going all the way back to the 70s, making homeownership a historically strong hedge against inflation. So what does this mean for you? Today, experts forecast home prices will only go up from here, thanks to the ongoing imbalance of supply and demand. Once you buy a house, any home price appreciation that does occur will grow in your equity and your net worth. And since homes are typically assets that grow in value, you have the peace of mind that history shows your investment is a strong one. That means if you're ready and able, it makes sense to buy today before pricing goes up even further. If you've been thinking about buying a home this year, it makes sense to act soon, even with inflation rising. That way you can stabilize your monthly housing costs and invest in an asset that historically outperforms inflation. If you're ready to get started, let's connect so you have an expert on your specific situation when you're ready to buy your home. Call or message me today, 408-475-0356. You can also email me at mjelian@intero.com. Thanks so much and take care. Bye-bye.